This is the Forex market. And in the Forex market, we look at the dollar, the euro, the British pound. Now, the euro and the British pound, we look at the futures. We want to kind of mix it up. And then in the US dollar versus the yen, the Aussie versus the dollar, US dollar versus the Canadian, we're looking at the cash pairs. Now, predominantly, the greatest volume in the world really this is a massive market and massive trade that goes on, specifically in the cash pairs. So I want to make sure I get a good focus on that. I look at the euro future because I like the idea of the comparison to the dollar, because the dollar index is 57% weighted by the euro. We had looked for the dollar to move up months ago. We talked about our target up over 96. That was accomplished this week. So the analysis in this market has been really great, and the picture is still for a strong dollar. Though some of these other currencies, maybe the Aussie gives you an upside trade, maybe the British pound pretty soon. But overall, the dollar still does look very strong. Dollar moving up on the prospect of higher interest rates and the prospect of the economies around the world not really being able to do as well as the United States. The inflation conditions are certainly a factor also. And the stimulus the next level of stimulus that might come really looks like it's stuck. So there's a lot of reasons why the dollar is strong, and the dollar remains in that condition. Let's take a look here as we switch over from the natural gas market to $DXY. So our analysis had shown that the pattern in here was a big inverted head and shoulders, and that there was a lot of resistance up here at the major 50 right there, and now we've put in the major 61.8% that comes from the big peak a few years ago. Here's your big inverted head and shoulders that you see. Left shoulder here, head, right shoulder. Some of you may love cup and handles, and you have a little one of those right here, which almost always lives in a inverted head and shoulders or a double bottom. In this case, it was pretty close to a double bottom, as you could see. Then when this cycle ran out of time, we were suspicious that it would then be moving up sharply to the upside. So here's your fib confluences right up over here. Generally, the 78.6% is a target area for a fib confluence, and that's right up over there where we have it pointing, which is actually over 97, which could be what happens in here. You'll note in here that it's 1, 2, 3 weeks off of this trough. That is very early, and that says that even if you got some pullbacks in here, it's very likely that the dollar will be moving up again. This is a very strong condition that we see in here, and it's really interesting when I get into the metals analysis. You'll see that gold and silver, platinum, they're actually acting very strongly, and they could be setting up for upside pops of some significance on some minor pullbacks here in the dollar, which you see we don't really have going on right now. But we're at a point where we'll get up to that major 50, and you could begin to get a pullback. Now this inverted head and shoulders, that's the measurement line right over here, and you can see it coming down right there, and we've gotten very close to it. Right now it's at around 96.60, so it's just about fulfilled that, but it probably will get through that level in the dollar. So just a great pattern and great analysis, lots of strength there in the dollar market. Here we can see the shorter term patterns here in the dollar. Interesting that you can see the trough right over here that was really important. Here is your dominant cycle rhythm right in there, and this one ran a little bit long right there. There was kind of a little throwaway at that point to end it, but it got right into that support zone and then turned up. So this trough came at the same time as the weekly trough right over here. And the principle of synchronicity, if you are a student of cycle analysis, says that these should bottom together. These troughs should come together, which happened right over here. And look at this big upward spike. So what happened was that you got into this corrective period. You had been in a very positive momentum condition. For those of you that are watching for the first time, our momentum indicator is the slim ribbon right in here, and the slim ribbon PO is the signal indicator for the slim ribbon, and all this positive stuff going on right over here. Then it neutralized right through this corrective period where the slim ribbon kind of laid on itself. So there was no momentum that was readable here. Then after this engulfing right at that point, it started to improve. And then that green arrow shows you where the slim ribbon turns positive. And this green, is the same thing as this positive condition right in here. And it's been pretty strong. It hasn't even been able to pull down and give you any kind of a signal yet. And the widening slim ribbon tells you about the strength in there. Now you have this doji going on and this stalling and this minor cycle likely to pull down. Now were it to get into this area right over here, this would be the top of that is the 38.2% fib, and that's at about 95.23. So were it to get down in here into this buy zone, well, this support is a buy zone, it would be very likely moving up again. So we want to always look for the highest probability entries in here. Now, if you don't like trading the dollar index or the dollar future, then you might want to trade the inverse to this, which is the euro currency. So we had looked for this period of strength in the dollar to come, and that would be inversely correlated with the euro currency, which we believed would be moving to the downside. And you can see in here, while the dollar put on a inverted head and shoulders, the clarity in this head and shoulders top was very clear. We saw the momentum turn negative right over here. We put this sign here weeks and weeks and weeks ago. Beware the major head and shoulders top. That was in line with the bottom of the dollar and likely that we would see the euro currency moving down. So momentum in here pushing hard to the downside, and the trough through right over here. You can see these two timing spikes right there. These are kind of telling you that somewhere in here is where this trough is likely to be. The daily pattern suggests the trough will be in mid-December. And I'll show you that in a moment. So that shows you that there will be some peak coming in the dollar sometime in mid-December. That's how the inverse correlation lines up. So we look for that type of information. Very clear cyclical patterns that you see in here, the dominant pattern, the minor pattern, and that trough likely coming based on the information off of this daily chart that's in mid-December. This says 12/16. The shifted cycle, because of the late low that we had twice now in alignment, says that comes on the 26th, sorry. So between the 3rd and 4th week of December is where these lows come. And with the downward pressure, look at the negative signals right in here. Fantastic, right? And right in here, it's so weak you can't even get up to the 75 to get the signals. And now we get a little bottom in here, some attempted little rally, that little potential pullback in the dollar off of that 96 level, and this is then a sell zone right in here because you have the momentum condition positive in the dollar, negative in the euro currency, negative in the weekly as you see right there, and then this sets up as a short side entry zone. So I'm going to have RV look at that and look for the potential setup of that short side sale in the euro currency because RV runs our trading ideas. So and he's fantastic at it. You got to watch his videos and the trading ideas. They're so instructional. It's incredible. So that is a look at the euro currency, and that looks like a bounce coming that should be sold inverse to the conditions of the dollar. /6B is the future in the British pound. We'll look at it quickly here on the side by side so you can see what's going on. This right over here is where there should be a trough right in here. There was an expectation that when this low came right over here, which seemed very early, that the UK would then be raising interest rates, but they didn't because everybody in Europe and everybody in the world is afraid of an uptick in interest rates because they don't want to disturb the capital markets, the stock markets, because if they do, then the whole false wealth effect will disappear. And part of that, of course, is really what's holding up the economies around the world. But there are massive deflationary forces out there, which I'll talk about in the future a lot. That's the natural force, prices falling, and the Fed tries to fight the natural forces, which is stupid. But that's what's going on. So I got on a tangent here, of course, but this was the low that came when they thought they were going to be raising rates, and then it got tested here much more on time. And there's a bottom due right in here. The daily chart is a little bit ambiguous, and with the strong dollar, it really looks like what will happen is you'll get some rebound right in here, and that rebound is coming with a negative slim ribbon, and now about to get a negative signal right over here on the slim ribbon PO. It says that you probably get up over here 135.30. This is 135.90, probably into that lower red zone right over there, and then move down one more time before that low is made. I don't really know if this dominant blue cycle is going to be where that weekly low comes, or if it's on this one right over here. It's a little difficult to tell on that because there are some competing cycle lengths in here. The cycle harmonics in here are showing at 25, 50, and 75 weeks, and they are basically out of phase. 3 minor cycles in the big dominant one, and then the intermediate one has got 2 cycles. You can see very clearly all of that cycle action that's going on. And if you're a short-term trader, you're really going to focus on the momentum forces and how the shorter cycles in here act in relation to support resistance levels and momentum conditions. Right now, the highest probability is a rally that still fails here in the British pound. So now we're going to move into the cash pairs, and we'll look at the US dollar JPY. Now, we put up a trade idea on this one recently because the probability was high that this cycle right over here was bottoming in what we call a very positive translation and a swamped condition right over here. So this is extremely strong. That note is incorrect. That is actually a right-hand translation. Let me just fix that right over there. In a swamped condition. If I can spell, we'll get that in there. There we go. And what swamp means is that this big dominant phase right over a cycle right in here, which goes back pretty far, it's gray because it's a much older one, was putting a lot of upward force in the market, and it would not let much of a correction come right in here. And so that energetic influence here was not strong enough to get to push down with this upward influence here, and that said that it was likely that a long side trade would come and be moving up there. Our target is up in the 116s, as you can see, pushing up into those higher fib confluences right there. Here's your daily pattern here, and when this low right over here was projected properly, so this weekly projection gave us a sense that it should rush over the 116 area. This low came over here in the buy zone and then popping up. As you can see in our upward projection is minimally up to that 61.8% fib extension, which is around 116.25. There are higher ones up there, and that target zone is between the 78 and 100%, that would give you a move up past 117 were that to occur. So this is a strong condition, very nice patterns, and that's why we put up a positive trade idea in this one. And I hope some of you took that position. So now we're going to switch over and look at the Aussie AUD US dollar. This is one that actually was showing more strength than the dollar for a little while. Now pulling back as the dollar is very strong, but in that buy zone. And you can see the minor cycle right in here that's nearing a trough. That should give you another rally up here in the Aussie dollar. So in moments where this dollar strength then gives way, I think the Aussie will peak. And this is actually a buy zone and getting in close to buy timing on the Aussie currency. When I look at the daily chart, you can see that daily chart. Important to see that the momentum in here is negative. This got very close to the 78.6% level right over here, which gives you a warning that the next rally is likely only to get into this resistance zone. But a rally is due, as you see us projecting. So we're looking for the Aussie to get some upticks in here. But again, not looking all that great when you look at it. Next one we look at is the US dollar versus the Canadian. And earlier in the show, when I was doing the energy analysis, I referred to this, saying that the dollar versus the Canadian is quite strong relative to the pattern. Now, for those of you that are looking at this for the first time, those yellow areas that you see are the corrective phases in the cyclical patterns. Generally, they're when the second minor and the dominant come down together. You can see that here and here and here and here. It's phenomenal, especially in this particular contract. And right now we were in that kind of a period. We got the downside movement. And what's happening now is that in advance of what should be a low right over here, the momentum is turning up. That is a warning that these lows are actually the low, and that this ideal pattern of another decline is not likely to occur. Or if it did, it would come down in a minor way and then be moving up again. Remember that the loonie trades, very much in line with the futures markets in energy and materials, because they're a natural resource economy. That's how they pay for all their socialistic stop me right there. Well, you get the idea. So what happened was that while the lows are due right over here in this trough right there, in alignment with this trough over here, this actually looks like the dominant cycle shifted over by one minor cycle from this distance here to here, and now about to get some little minor pullback in here and then be moving sharply to the upside again. So very soon we're going to put a buy zone right in here, because we'll expect some little pullback in the US dollar versus the Canadian. But because of the weakness in the energy market, because of the strength in the dollar market, all of this points to the fact that this rally right over here on the weekly chart has begun, and that this low was actually the low, which came a little bit early, and still within the range of time, not far off, as you see that where the trough should be. But this is the giveaway right over here. Momentum turning negative, slim ribbon turning positive. The momentum, going from negative to positive, slim ribbon here turning positive. This upward turn from negative to positive and the intermediate momentum. All of that is suggestive. If you get a pullback in the US dollar versus the Canadian, it is going to be an opportunity to buy for what could be a good upward surge. If you look at this pattern here, this cycle right there is a positively configured cycle. What it says is that this peak is likely to get challenged way up over here at 129, 130, and somewhere out over here in coming months. You got to keep that in focus, because that will give you an opportunity to buy the dips. It'll give you the belief or the confidence that there's a positive condition going on in here that will allow you to buy the dips with some sense that you're going to get paid on that, or the risks are not as great to the downside as the profit potential on the upside. So a very good picture there of what is a much better pattern in the US dollar versus the Canadian, and overall a very, very strong condition in the dollar as it comes up and meets our upside objective.